Namaskar, and I'm truly honored to have this opportunity to speak to all of you in a virtual format about the future of our economy after COVID. COVID has been unprecedented event, something that happens hopefully only once in our life, and is also ushering in a lot of change. COVID is not a game changer so much as it's an accelerator of a lot of trends which are underlying. And for Indian economy, COVID is going to be a very important inflection point. So I'm very happy that we are all thinking about the future of our economy after COVID. I think when I think of COVID, the one word that comes to mind is it's a time of change. It's a time of parivartan. We have to usher in change. COVID has forced all of us to anyway usher in change, but we have to embrace it with both hands and take this opportunity to really bring about a deep parivartan in our economy. COVID has happened to our economy at a very important stage in our growth cycle. We are now almost $3 trillion dollars amongst the top five or six economies in the world. And on a purchasing power parity, we are amongst the top three economies in the world. So Indian economy has come of age 70 years, 72 years after independence. We are now a large economic power. Along with this, there is a lot of global focus on us. Everybody is watching us, everybody is looking at us. So one thing that is important is how do we take this current $3 trillion economy to 5 trillion, to 10 trillion and 20 trillion. And for that, over the next 20, 30 years, we'll have to maintain the growth rate that we have maintained, but continue to reinvest in ourselves and our country. The main driver of Indian economy historically has always been our savings, our investment, and our consumption. All three of them are very, very important for driving India's growth. India has one of the largest pools of savings that is there, almost 30% of our economy, which is 30% of $3 trillion, $900 billion worth of savings accrue every year. Our gross domestic savings at $900 billion is one of the biggest trends we have, and we have to use all means we have to channelize this investments in this savings into long-term investments. The other pillar of our growth is investments. India needs a lot of investments. India needs investments in infrastructure, it needs investment in manufacturing capacity, it needs investment in uh, in housing, it needs investment in building office complexes and IT parks and business parks. So this all investments ideally should come from our savings. We have to convert our large pool of savings into investments for the growth of the economy. And the third driver of our economy is consumption. We are one of the largest middle class in the world, uh, the largest middle class population in the world. We also have huge amount of urbanization that is going on, and this is driving consumption. Out of $3 trillion, dollars, if $900 billion dollars is saving, then $2.1 trillion dollars is consumption. So we're consuming quite a bit. It's one of the best markets, growth markets in the world. And we have to see how do we use consumption also as a big driver, because consumption will drive investments, investment will require savings, savings will grow the economy and drive more consumption, which will create more income and more savings as we go. So there is a nice virtuous cycle that can happen between consumption, investment, and savings. And we should take this opportunity to think about how we drive this even further. In terms of savings, one of the biggest driver of our savings is the household savings. Indian households save a lot. We are very frugal people, and because we save a lot, there is a need to invest this. India is a country of savers. We also now need to become a country of investors. because unless we channelize this savings into long-term investments, for that we need a very robust financial system. Indian banks, especially PSU banks, have done a great job over the years of channelizing household savings and providing credit to the economy. Indian equity markets have done a great job of channelizing savings and using them to provide risk capital, equity capital. However, we are still hugely dependent on foreign money, the FII money, the private equity investors, all of them for largely risk capital and long term capital. For some reason, we have not been able to transform the large pool of savings we have into long term money. And the banks are not the only system that we should use, because banks, by its very nature, have to stay in the short term. A lot of their deposits are callable. Investors, depositors can go and take the money anytime from the bank. So banks cannot really invest for the long term. So banks have to make sure that they are not at the long end but at the short end. So who will provide the long term capital? I think it will come from bond market, from capital markets, from insurance companies, from funds that we create via capital markets like AIFs and others. And we should take this opportunity to reduce our dependency on foreign capital and increase our dependency on Indian capital. To give you a comparison against our local savings, our domestic savings of $900 billion, the foreign capital that we get every year, including FDI, including FII, including international borrowing, all of that put together is not more than $100 billion. So the foreigners give us only 1/10 of what we save on our own, but they command a disproportionate power in our markets because they provide risk and long-term capital. If we can take that mantle, if we can take this challenge and say we will create our own risk capital, we'll create our own long-term capital, and we'll create instruments and market mechanisms and institutions to create that, our dependency on foreign capital will also come down, and we will become truly Atmanirbhar in our needs for capital. I think COVID and the way the global winds are, we should increasingly be more and more self-dependent on our core needs. And as I said, our core needs are savings, investment, and consumption. So if we can do this, because international capital is not bad. I think FDI is good money. FII investing in India has also been good. But being overly dependent on them is bad, because the mood of the global markets, the mood of the global investors change. If the US Fed changes interest rates, it affects capital availability for India. If the some other emerging market has a problem, it affects capital availability for India. So we can't be always at the whims and fancies of the global environment all the time. Along with that, global rating agencies also have their moods, and a lot of them have been a lot more skeptical of India's story and India growth. And we also should not be dependent on the rating agencies, the global rating agencies, for our need for capital. So I think the first premise would be, how do we expand our banking system? How do we make sure that we have enough instruments to generate our own long-term capital? Because our key needs are infrastructure, our key needs are housing. All these are long-term assets. A home loan is a 10-year loan. Our infrastructure needs a 20-year kind of a financing. A steel project or a power project has a 20, 30-year horizon. So an airport that is getting built has a 20-year horizon, 30-year horizon. So our needs are long-term horizon. Capital required is long-term. We have to provide it ourselves. So that would be uh, my first suggestion, that we use COVID as a turning point and use this to usher in Parivartan, but also become Atmanirbhar. One of the other challenges in our economy that we should address is availability of credit. Availability of credit to small and medium enterprises for long-term projects, for for driving the growth of the economy. And our banking system has done a good job, but they are very stretched. And we have to supplement, we have to expand the banking system, the NBFCs, the bond market, all of that to make sure that credit is available at the right price to the right borrower, because only with credit can economic growth be driven. Credit is the blood of the economy. And we have had the last few years where credit has been drying up. Our credit growth is uh, at a 20-year low. We should use COVID to see what we can do to drive credit growth. One of the things we need to do is make sure that we encourage banks, we encourage NBFCs, we encourage all of them to lend more, take risk on lending because that is what is there, and price the risk so that it's not an economically unviable activity, but use this to take risk. There is a huge amount of risk aversion that is set in, and part of the risk aversion has been the buildup of NPAs in the Indian economy over the years. One of the key problems we have is we have an economy where cash flow adherence is still not there. People don't pay on time. Contractual enforcement is weak. But we adopted an NPA system which is very rigid. We have for 3 months, if a customer is not able to pay and becomes an NPA, then that company, its existence, its future growth, all of that comes in jeopardy. So we need to go back and revamp the NPA system and align it with the realities of the economy. Also change the economy's focus on cash flow adherence, payment on time, contract enforcement, all of that. But until we get that, we can't have a credit system that is out of sync with the economic realities of India. I think this should be a good time to go back and change our NPA rules, to change how banks take risk, because very often a good company becomes an NPA just for cash flow reasons, so the underlying company and the assets are very good. And once it becomes an NPA, its access to credit becomes even bad and even worse. And along with access to credit for that company, a lot of other companies also don't credit because banks and NBFCs become risk averse. So we have to break this cycle of risk aversion, and we should use this. Last 5 years has been a huge effort to clean up the huge NPAs in the banking system that got built up. But I think let's use COVID to, for once and for all, clean up the past, but also create a system that is more realistic. I think we should create an NPA system that is truly reflective of a non-performing asset and not just a liquidity-driven NPA system. One of the other challenges of COVID is going to be that the big will get bigger, the strong will get stronger, because COVID has dried up access to capital, access to opportunity. The Indian economy is undergoing a deep formalization also along with that, along with GST and technology and all that. As a result of that, a lot of the small and medium enterprises, the mid-sized businesses, have fallen behind. कोविड had accentuated their problem. कोविड की वजह से हमें मालूम हुआ है how deep the suffering is for a lot of these companies. So I would suggest that we use COVID as an opportunity to make sure we create a level playing field, but we also don't allow too much concentration of economic power and not only allow the big to get bigger. What has happened is the large companies, the highly rated borrowers are getting capital, but the mid-sized companies, the small and medium enterprises are struggling for getting capital, both equity capital and credit. Our government has done very good job. The MSME 3 lakh crore scheme has been very well designed. It will alleviate the problem. Also, the other schemes that the government has done and the fiscal stimulus and the 20 lakh crore package announced by the Prime Minister has also been helpful. But this is just to tackle COVID. Beyond COVID, we need to change fundamental access to capital. We need to make sure that a lot of the small and mid-sized companies, which have great entrepreneurs, great business models, but just because they don't have a track record, they are not large, they have not been around for a long time, they should not get marginalized. And that is another very important part, that we don't allow our economy to become more and more concentrated, but we really usher in more competition, more innovation, more entrepreneurs coming in. And for that, startups and mid-sized companies are very, very important. They have to constantly innovate, challenge the incumbents and make sure that the needs of the economy, the needs of the customer are constantly understood and products and services are created for that. We also need to drive consumption. Consumption is the heart of our economy. The growing middle class, urbanization, all of that is driving consumption. For driving consumption, cost is a big player. We need to reduce our own manufacturing cost. We need to reduce our dependency on imports and become as self-sufficient as possible so that we can manufacture things that we need for our economy as efficiently as possible. This will need a lot of investment, this will need a lot of entrepreneurs, but this will also need consumers to understand and appreciate Indian quality. For consumption, I think one of the things we need is strengthen our manufacturing but also focus on quality, because Indian consumers are also quality conscious. They will not accept any quality, and I think it is time that our manufacturing industry also up the ante on making high quality products for the Indian market, because consumption will drive investments. Very rarely will people put up investment capacity unless there is clarity that there are buyers for their products, unless they know that consumers are going to be there. India has consumers. We need to make sure we create products for them. The other thing we need is we need to bring cost down, because as we make it cheaper for people to access products and services, growth will come in. We need to make sure that we rationalize our tax structure, especially GST, and make sure that it is very consumer friendly, especially for the middle class, for the essential items. As low a consumption tax that is there, it will be very helpful in driving consumption for that. We also make sure we invest a lot in things like distribution systems and logistics and technology, because technology has created a big opportunity for India. In a way, we are very fortunate that we are at this stage of our growth and is this stage of our investment where cost of investment has come down. Technology has made it cheaper to invest. Technology has improved the efficiency of investments. Power projects, we are seeing in renewable energy, cost has come down a lot. Capital cost for solar power has come down by almost 80-85% than what it was 10 years ago. So at this stage of our infrastructure building, of our investment, technology is a big friend for us. The more we embrace technology, the more cheaper it will be for us to create the things that we need, because it can be now done in at a lower cost, in shorter time, with a lot less effort, but should be of high quality. So I think India should make it easier for companies to access technology, to make sure we have good quality technology which is used to create goods and services on a mass scale, because we have economies of scale. We have a large market at 1.3 billion people. India's needs are very big, and that will give us economies of scale. Catering to this mass market can be very profitable for Indian companies. We should encourage more and more global companies to set up a base in India. We should encourage them to come to India, manufacturing in India for the Indian market, and try and reduce this manufacturing abroad for Indian market. Why should the consumption of India drive jobs abroad? We should make sure we bring them out here, create jobs for our people, create wealth for our people. But for that, government policies as well as infrastructure development is going to play a big role. Friends, every crisis is an opportunity. COVID is a big crisis, and our country, which is large, still is investing in the healthcare infrastructure, has been challenged disproportionately as compared to other countries of the world. Though COVID is a global crisis, India has been faced with a lot of challenges. Thanks to, I think, initiative of our government, the strength of our people, we have managed it well up till now. There has been a cause, there has been a lot of stress. The crisis is real, but it could have been worse, and I think we have been able to manage it well. However, this crisis is a real crisis. It has created huge amount of cost to our economy, huge amount of damage to our economy, because in order to save lives, we had to take some hit on our economy with the lockdown and all. Having taken that, Now we need to repair the economy. We need to get the economy back on track. And we need to now convert this crisis into an opportunity. One way to do that is to think about reforms, to think about what we can do to change. Because in good times, it's hard to change for individuals, for countries, for organizations. When things are going well, it's very hard to undertake change. But in crisis, we can galvanize ourselves. In crisis, we feel we can now change, we can show it, we have the wherewithal, we have the energy to change. And this crisis should be that opportunity for us to say, let's change fundamentally. Our economy has gone through many cycles over the last 70 years. We have evolved. A lot of crises have happened. In 60s, there was a food crisis, there was a foreign currency crisis, then there was a balance of payment crisis in 91. We have used all crises. We have had droughts, we have had a lot of other issues. We have used each and every one of them to change ourselves, reform ourselves, and grow stronger. This is also the time to undertake some deep-rooted reforms. When we did last big round of reforms in 1991, and then we did some more in 2001 to 3, we did them in partial manner. I think in the 91, because of the balance of payment crisis, a lot of the opening of the economy happened at the market level. We reduced our import duties, we opened up the competition, we allowed a lot of foreign investment, all of that. All that has been good for the economy. But we have not changed the fundamental input parameters. For driving the economy, what are the inputs required? They are land, labor, capital, and a judiciary ecosystem. All these are required to drive the output. So we can't only change the output, we have to change the inputs also. And our reforms up till now have been largely designed on the output side of the economy. This could be a great opportunity to look at the input side of the economy. Land. Our land needs a lot of reforms. We need to, with technology, digitize land records, make it easier for people to buy and sell land, make it a lot easier for just allowing companies to be able to get land for putting up investment capacities. This has been one very touchy problem in India because we have to balance the needs of the farmers with the needs of the economy and the industry. But I think a spat of reforms in this area will allow us to overcome this challenge. We need reforms in capital, as we spoke earlier, in access to credit, in the banking system, in the capital market system. We need some deep-rooted reforms in the capital arena also. And the third one we need is in the labor area. A lot of states have recently tried to change the labor laws because we need to make labor laws. And here also the challenge is between looking after the needs of the workers and the needs of the industry. All countries have this. Many countries have been able to find that balance between the needs of the economy and the needs of the laborers. Our laborers are our strength. We have a large labor force. We need to make sure that they are taken care of, but they also get an opportunity to participate with jobs in the economy and create more and more jobs and more fulfilling jobs. And the fourth one is in the area of law, legal, and judiciary, because any economy of our size needs a very well functioning judiciary and legal system. We have the rule of law. We are a large democracy. We have shown that we can, in spite of all the challenges, continue to grow and invest in the economy. But our legal system also needs a lot of reforms. There are a lot of papers that have been written on that. But we need to make sure court cases are disposed of quickly, contract is enforced fairly, and because very often if justice is delayed, it is effectively denied. And given that, we can make a lot of changes, increase the capacity of our courts, and make sure that even this part of the economy falls in place. So if we can take some deep reforms in land, labor, capital, and judiciary system, it will go a long way. And this is a time for that. We have this government which has been very decisive, which has not been afraid to take political risk in order for change. We have a strong government. COVID has also fortified us. It has made us stronger. It has made us realize that we need to change. We need to take this opportunity and not allow our potential to go to waste. So let's grab this opportunity and usher in reforms and change also. So, in summary, I would say let's usher in change. Let's become more Atmanirbhar. Let's grab the Parivartan opportunity we have. Look after the small and mid-sized businesses, undertake reforms in labor, take care of our workers. We saw recently the migrant workers also are a very important part of the economy and we need to think about them and take care of them. But if you can do all this, given our large economy size, our young population, the demographics are some of the best we have, the huge urbanization that is underway, the formalization, the technology investment we have made, the India stack and UPI and all as are really revolutionary at a global level. Having done all of this, we have a lot of ingredients in place. And if we can currently really fortify ourselves, bring in consensus on this, and go forward, we will truly show the world that India is very resilient. India can bounce back, India can take challenges, also come back in a big way. We have done that many times. This is a big crisis, but our economy has two deep strengths. Our resolve is very deep, our people are very strong for us to not be able to grab this challenge and go forward. So, along with that, friends, once again, I thank you all for listening into this, for giving me a chance to share our views on Indian economy after COVID and how do we use this for the next phase of growth. Thank you. धन्यवाद.